Welcome back. You're still with us on Markets Today. Let's go to the rest of the headlines that we're tracking for you. The fourth headline today, the Union Cabinet is likely to discuss gas pricing issues in the upcoming meet. Sources tell CNBC-TV18 that the Cabinet is expected at looking at the recommendations of the Kirit Parikh panel on gas sector reforms. Shares of gas distributors like IGL, Mahanagar Gas and Gujarat Gas were also buzzing in trade today. Sapna Das joins in with more on that. Sapna, over to you.
So basically, this is an important heads up in terms of the cabinet likely to consider new gas pricing guidelines. And this will be, of course, in the next upcoming meeting. It could happen as early as tomorrow, or it could happen sometime this week. But that's a clear indication. So that's one. Now, in terms of what the government is going to accept as far as the Kirit Parikh recommendations were concerned, that's something that we'll have to wait and watch for. Very clearly, 2 to 3 important areas that the Parikh panel had marked. One, of course, dismantling of APM over the next 5 years, so a transition period to be given for the old gas fields, with the pricing range of $4 to $6.50 per MMBTU. That's one. And, of course, dismantling by 2027. That's one. Second, of course, in terms of the new and more challenging gas fields, where the upper price cap needs to be done away with. That's second. And, third, overall, in terms of moving towards a more market-determined price for gas, rather than, benchmarking it to your international gas hubs. More or less, this is what the panel suggests. Now, this was all supposed to happen as per the panel from April 1, but we are already in the first week of April. So it remains to be seen how much of it the government accepts and cabinet gives its approval, and what are those, rollout timelines. But going forward, it's very important now, not just for the industry, but also for consumers.
All right. Thanks a lot, Sapna, for that. Well, the fifth headline today, gold prices hit an all-time high in India. The yellow metal surged over 2% overnight, and silver surged as well to its highest level since April of 2022. Gold is now in excess of 60,000 rupees per 10 grams. Manisha Gupta is here with all the details. Manisha, over to you.
Well, with 2% gains overnight, gold prices in the global markets are trading at a one-year highs, and we're trading at an all-time highs in the Indian markets. We did hit that 61,000 rupees per 10 grams for the markets here. For the silver prices also, it has been 5% of gains overnight, and we are trading at a 32-month highs. 75,000 rupees per kg in the Indian markets has been broken on the higher side, and we've done $25 per ounce in the global markets as well. Well, the support comes in from the fact that the dollar index is trading at a 2-month lows. There is now a 57% probability of no rate hike in the month of May, and the weak US data that we have seen in sense of manufacturing numbers also has led to gains coming in for gold. Also, the conversation that most countries would want to trade with their own currencies, not wanting too much of emphasis or dependence on dollar, also has led buying in case of gold. Markets are looking at hedge funds buying gold too. So the shorts are being closed, longs being created. Net longs in gold right now are at 99,000 contracts. Net longs in silver right now stand at 10,000 contracts. Not just that, the ETF buying also has begun for the first time in 10 months. You're looking at central bank buying, which hit record highs in the previous year, also hit the best in a quarter in last 10 years, is what we have started 2023 with. The physical buying in the international markets also has been quite strong. For the Indian markets, though, with all-time highs and multi-year highs, we are looking at the spot prices now trading at a discount, where people are not buying gold, but getting their old gold and silver into the markets to cash it out.
Okay, thanks a lot for that. So that's on gold hitting new highs. But let's get back to the big headline, which is the RBI monetary policy. The Reserve Bank's two-day MPC meeting is underway with the rate decision due tomorrow. As per a CNBC-TV18 MPC poll, over 90% of participants are expecting a 25 basis points rate hike. Ritu Singh is here with the details. Ritu, over to you.
Well, it looks like we're nearing the end of the rate hike cycle, but before RBI well and truly changes course, there could be one more hike in the April policy. 90% of our respondents expect that the MPC will hike repo rates by 25 basis points in this policy, taking it to a 7-year high of 6.75%. The culprit here is inflation, which remains stubbornly above RBI's comfort level. And of course, the other area of consideration for the MPC is going to be action by other global central banks, but RBI has maintained that it is guided by domestic factors. All of the respondents to our poll said that the April hike will probably be the last one in the current monetary tightening cycle, which began in May last year. The peak rates are seen at 6.75% by the majority, but after this rate hike, RBI is expected to pause for a while before it starts to reverse these hikes. So 40% of our respondents believe that we could only see cuts in the second half of this financial year, whereas a third expect the first rate cut to only be delivered in the first quarter of the next financial year. 30% expected to happen perhaps sooner. Now, RBI could also raise the CPI forecast for FY23 marginally, given the unexpected high inflation readings recently, while leaving the 5.3% CPI forecast for FY24 unchanged. Now, RBI is also unlikely to tinker with the growth forecast, although some expect a marginal lowering. Almost 30% of our respondents said they expect the stance of the policy to also be changed to neutral, but a much larger majority of 70% believe it will be left unchanged at withdrawal of accommodation because RBI may not yet be comfortable enough to signal that they are done with the rate hikes given the global uncertain outlook.
We are looking at a hike tomorrow as well. We think that given where the currency is, you have to keep hiking if the Fed hikes. Then we see 100 basis points of rate cuts from October if the Fed were to stop at 5/4.
Okay, so lots of action lined up tomorrow with the RBI policy. But with that, it's a wrap on this edition of Markets Today. Thanks a lot for watching.